Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you will learn about stock investing and personal finance that will help you become a great investor. In today's video, I am going to explain why Apple stock dropped 5% after Q4 earnings and why you shouldn't be worried about it. I am going to cover these topics in this video. First, why Apple stock dropped 5% after Apple released its Q4 earnings. Second, Apple's Q1 2021 outlook. Third, why you shouldn't be worried about Apple stock dropping 5% after Q4 earnings. Fourth, what are Apple's long-term growth prospects and the next revolutionary product? Fifth, when is the best time to invest in Apple? And sixth, conclusion and why I am not worried about Apple's recent drop. If you like this video, remember to hit the like button and subscribe. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. First, why Apple stock dropped 5% after Apple released its Q4 earnings. The biggest reason was that Apple's iPhone sales in Q4 2020 were down 20.7% year over year compared to the same quarter of last year. If you look at the net sales by category table here, you can see that Apple's iPhone sales were not that great in Q4 2020. In comparison, all other Apple's product categories, including Mac, iPad, wearables, and services, did very well in Q4 2020. All other categories except the iPhone had double-digit growth. Apple's services and Mac's revenue growth were excellent. According to Apple's CEO Tim Cook in the Q4 earnings call, he said, "As we anticipated, we launched new iPhone models in October, a few weeks later than last year's mid-September launch. Up to that mid-September point, customer demand for iPhone was very strong and grew double digits." The second biggest reason that Apple stock dropped 5% was that Apple did not do well in Greater China. If you look at this table here, Apple had single to double-digit growth in all segments except Greater China. China's sales were down 28.6% year over year. According to the earnings call, Tim Cook said, "The Greater China is the region that was most heavily impacted by the absence of the new iPhones during the September quarter. Still, we beat our internal expectations in the region, growing non-iPhone revenue strong double digits and iPhone customer growth mid-September." Apple stock dropped as much as 5% after Q4 earnings release, mainly because Apple delayed their iPhone 12 release to October, which will be reflected in Apple's Q1 2021 earnings. Now, Wall Street was not impressed that Apple's iPhone sales declined year over year and was not impressed that Apple's revenue also declined in the Greater China region. But to be fair, Apple had a record revenue of $64.7 billion in Q4 2020, despite that the pandemic where most companies' revenue dropped substantially. Apple's total revenue increased 1% year over year in Q4 2020, and all other Apple products except the iPhone had double-digit growth. Now, there's one positive thing about iPhone sales I should mention here. According to Tim Cook, he said, up to that mid-September, customer demand for iPhone was very strong and grew double digits. This simply means Apple's iPhone sales were growing until the middle of September. Many customers likely delayed their iPhone purchase in the last 2 weeks of September because they were waiting for the new iPhone 12 release in October. So hopefully, Apple will have a large iPhone sales growth year over year in the upcoming Q1 2021 earnings. This brings us to Apple's Q1 2021 outlook. Now, according to Apple's management, they're not giving a revenue guidance for the upcoming first quarter of 2021. However, here's what they said about Apple's iPhone 12 sales. Apple's CFO said, "We just started shipping iPhone 12 and 12 Pro and we're off to a great start. We're also excited to start pre-order on iPhone 12 mini and 12 Pro Max next Friday. Given the tremendously positive response, we expect iPhone revenue to grow during the December quarter, despite shipping iPhone 12 and 12 Pro 4 weeks into the quarter, and iPhone 12 mini and 12 Pro Max 7 weeks into the quarter. We expect all other products in aggregate to grow double digits, and we also expect services to continue to grow double digits. Apple's management is very optimistic that iPhone sales will grow again in the first quarter of 2021 because of iPhone 12 sales. They also expect that all their other products in aggregate will have a double-digit growth. If iPhone sales grow again in the first quarter of 2021, we can expect that Apple will have another record revenue in the upcoming quarter. Now, why you shouldn't be worried about Apple stock dropping 5% after Q4 earnings? The biggest reason is that Apple, in my opinion, is still making excellent products every year, especially the iPhone, iPad, and Mac, which are Apple's 3 most important products. I don't think Apple needs to release revolutionary products every year to increase its iOS user base and its total revenues. According to Tim Cook, Apple had 1.5 billion active devices in the first quarter of 2020. This means Apple has a lot of leverage and options selling more services to its growing 1.5 billion active devices and users. This is why Apple's App Store revenue is growing at a much faster rate than other products. Now, as long as Apple is continually innovating and making great products every year, I believe that Apple's revenue, iOS user base, and net profit will continue to grow for many years. So, what are Apple's long-term growth prospects and catalysts? First, according to Apple's 2020 annual report, Apple's iPhone sales have been decreasing. If you look at this table here, you can see Apple's iPhone net sales decreased from 2008 to 2020. Apple's other products, Mac, iPad, wearables, and services sales grew between 2018 and 2020. I believe that Apple's long-term revenue growth will be coming from Apple's other products, especially Apple's wearables such as the Apple Watch and the AirPods, and services such as the App Store and Apple Cloud. Apple's wearables and services have the biggest revenue growth potential. For example, Apple services had a gross margin of 66% versus products' gross margin of 31.5% in 2020. And Apple services revenue also grew at a double-digit rate in 2020. You may wonder, what is Apple's next revolutionary product that will drive Apple's long-term growth? I personally believe Apple's next revolutionary product will be the Apple Air glasses. It will either work alongside the iPhone similar to the Apple Watch, or it may eventually replace the iPhone in the future. The Apple Air glasses are going to compete with Facebook's Oculus VR headsets, especially the Oculus Quest. Now, unlike Samsung and Facebook, Apple tends to wait for the new technology to mature first, and then improves the technology to make it much better and user-friendly before releasing the new product to the consumers. Now, I cannot predict when Apple will release its AR and VR glasses to compete with Facebook's Oculus Quest, but I believe that Apple will release it within the next 5 years or perhaps even sooner. You may wonder, when is the best time to invest in Apple? When it comes to investing, the best time to invest in a stock is when the stock is undervalued, or when the stock price is traded below the stock's intrinsic value. The problem is that it's very hard to estimate the stock's intrinsic value because you will have to predict the company's future earnings and cash flows, and then discount the company's future earnings to the present, assuming your future earning prediction is correct. For me, I like to invest in a stock when I see there's a large price correction. I like to follow Warren Buffett's advice: be fearful when others are greedy and be greedy when others are fearful. When there's a large price correction, Apple's stock price is likely undervalued compared to the stock's intrinsic value. So for example, if you look at Apple's stock price in the past 12 months, Apple's biggest correction was in March 2020 when the stock dropped as much as 29.96%. That was the best time to invest because the stock was much cheaper and much likely undervalued. Then in September 2020, the stock dropped approximately 20.38% after Apple's 4-for-1 stock split. Then in the last 3 weeks in October 2020, the stock dropped approximately 12.49%. If you want to invest in Apple, you have to do your own research first, understand what you invest in, and wait for large price corrections before buying. So that the stock will be much cheaper, this allows you to invest with a greater margin of safety, meaning you are buying the stock below the stock's intrinsic value to reduce any risk. Now, I've been a long-term investor of Apple for almost 9 years because I like Apple's products and its future economic prospects. I also like Apple's iOS ecosystem, which is Apple's biggest competitive advantage. The only company that can really compete with Apple's ecosystem is Google's Android ecosystem. So in conclusion, I am not worried about Apple's stock dropping 5% after the company's Q4 earnings release. I believe Apple will continue to grow for many years because Apple, in my opinion, is still making great and innovative products year after year. Now, Apple's iPhone sales did decrease between 2008 and 2020, according to the company's 2020 annual report. But I believe Apple's long-term revenue growth will be coming from Apple's other products, including the iPad, Mac, wearables, and services, especially the App Store, Apple Cloud, and Apple's subscription services. Within the next 5 years, I believe Apple will likely release their AR glasses. I believe the AR glasses will be the next revolutionary product to drive Apple's long-term growth. Now, if you like this video, hit the like button and subscribe. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.